Hey folks, SoundHound just released its Q3 earnings report and the markets didn't really seem to like it. As you can see, the stock is down 17%, but all in all, I thought the report was pretty solid. So I'm going to break down what was good and what was bad about it. As always, this is not financial advice and is for entertainment purposes only. So let's go over the bad stuff first. The glaringly obvious point was that SoundHound still doesn't seem to have a huge QSR brand, QSR meaning quick service restaurant, as a customer yet. From its list of customers, it looks like the biggest one is Chipotle, and if we look at this table of the biggest QSR brands by sales, it looks like Chipotle just scrapes into the top 10 at number 9. What SoundHound needs to do is to land a bigger brand like any of the top 5, and then the interest for SoundHound will go through the roof, not to mention the positive impact it'll have on its bottom line. SoundHound has been pretty good at getting more and more middle to small brands on board, but again, I think the market would prefer it to target the big whales just mentioned because it increases operational scale. Which brings me to the next bad point, and that is gross operating margins have been declining. In this chart, we can see that Q3 GAAP gross margin has been declining over the past year, which is not a good sign because it means the company is not as scalable in its operations as the market would like. I'm not sure if this is something to do with the increasing number of small brands SoundHound is working with or issues with integrating Amelia into its existing business. A business that does have scalability is a company like AppLovin, which has been steadily increasing its revenue and operating margin alongside it. That's why the stock just keeps going up and up. And finally, SoundHound is relying too much on inorganic growth. Inorganic growth is growing through acquisitions, not by naturally expanding existing operations. Let me explain. Before SoundHound acquired Amelia, its revenue was $13.5 million. They paid $80 million for Amelia, and if we assume a conservative price to sales multiple of 10, it means Amelia was generating around $8 million in revenue per year. So if we add that to SoundHound's Q2 revenue of $13.5 million, it gives us $21.5 million. In this latest quarter, SoundHound reported $25 million in revenue. That means it grew by only $3.5 million organically, i.e. if we take out Amelia's contribution. However, that's still a more than 16% organic revenue growth quarter over quarter, which is quite strong. But the worst thing in my opinion is the lack of progress on winning big clients. They have Stellantis in the automotive sector and lots of small, medium-sized fast food brands, with the exception of Chipotle, which is a rising star. And although they were talking about expanding into other sectors like IT and insurance, maybe they're doing this because they can't get any more big customers in the automotive and QSR sectors. Something to think about. Anyway, let's move on to the good parts of the earnings report. Losses have declined sequentially. The net loss in Q3 was $21.8 million, despite the high R&D spend, so there is some operational efficiency boost there at least. And the most exciting part of the earnings report is that SoundHound is expanding into sectors other than automotive and QSRs. First, we have healthcare. The acquisition of Amelia has enabled SoundHound to enhance patient appointment management systems, as demonstrated by Musk Health's implementation of an AI agent for scheduling. I'm assuming this is a system where you can talk to it and the agent schedules the appointment for you. It sounds pretty basic, but hey, at least it's a foot in the door, and if SoundHound can expand its reach to other hospital services, it could open the door to enormous opportunities within the healthcare space, which is going to be very lucrative. On top of that, we're seeing SoundHound's voice AI being used in financial services, insurance, and retail sectors to improve customer interaction and operational efficiency. The lack of dialogue on this suggests to me that the contribution to revenue from this is quite low still, but again, it's a foot in the door. Finally, the guidance was upgraded, so that was good to see. Anyway, that's enough about the earnings report. Let's talk about the price action. So we saw that SoundHound fell in pre-market trade and never really recovered, falling further during the session. The volume was significant, which is a bit concerning, and as you can see, we are sort of at the top of this trading range. I want to see some sort of a bounce tomorrow, otherwise we may go back down to the 5s. But if we zoom out, we can see that the trend is still clearly up, and I don't really see a reason to sell my shares. So basically, I'm holding onto my SoundHound shares for now. We still have 2 more trading days left in the week, and to be honest, the earnings report wasn't bad, and I feel that the market reaction was not commensurate with the business performance reported. So who knows what's going on behind the scenes, but this stock has always been quite volatile, so sometimes you're going to get bad down days like this one. It comes with the territory. But I'm still bullish on this stock for the rest of the year. Hopefully we'll get some positive news in the coming months about new client wins and so forth. And if you haven't already, please click the like, subscribe, and bell notification for more SoundHound videos. Thanks for watching and see you next time.